Hey everyone, Ronnie Jenkins here from thepropertyunion.com and Keller Williams Silicon Valley. Summer is here, which means increased action in the real estate market. This is a trend that we see every year because it simply makes a lot of sense. It's much easier for families to move during the summer break than during the school year. So as schools let out, families prepare to sell and or buy during this time. This traditionally leads to an influx in inventory, which is definitely needed in Silicon Valley. However, in spite of this, we are actually seeing the market cool down a little bit. And this can be credited to one thing: China. Now, you may say, what does China have to do with Silicon Valley real estate market? And I can tell you a lot. Over the past 5 years or so, we've seen a massive flow of investment money from China. The amount invested into US real estate has surpassed $110 billion. And a large portion of that investment is in Silicon Valley. This has been a double-edged sword because on one hand, it's definitely helped repair our real estate economy and brought prices up to definitely a good level. But on the other hand, it's also driven up the prices so steep that many people have been priced out of the market. These investors have been coming in with all cash, willing to pay whatever it takes to get the property. They really don't care about the property itself. They care about putting their money into something safer than their own economy. This is reflected in the fact that a large amount of these properties purchased have been sitting vacant. At first it was okay, but it quickly got out of hand. Prices have appreciated to record highs, competition on properties is ruthless, and bad practice is being exercised by agents and clients as they try to be competitive. But the good news is, it looks like the wave is coming to an end, and there are signs of sanity being restored. A recent article from the Financial Times, article below, highlights increased levels of enforcement Beijing is implementing to restrict the amount of money that leaves their economy. There have been existing capital controls on foreign investment, but many investors were using loopholes to get around them. These loopholes now have been secured, and it is increasingly difficult for excess money to leave the Chinese economy. So how does that exactly affect us here in Silicon Valley? Well, with the decrease in Chinese investors, we're seeing less competition for properties, which means more opportunities for people who actually live here and want to put down roots by purchasing a home here in Silicon Valley. This also leads to a more gradual appreciation rate in the property market. I don't think we're going to see a dip. Prices will still be on the rise, but it will be a more steady rise than the steep appreciation that we've been seeing. And so this means that the excess overbidding won't be necessary in many cases. We're going to start seeing properties taking a little longer to sell and selling closer to asking price. And in general, a healthier market cool down, something I think we need. So having said this, the market's still hot. It's just not boiling hot. Chinese investor money has been a big factor in Silicon Valley real estate for the past few years, but not the only one. There's still many buyers out there desperate to own a home with rent prices continuing to increase, and there is a lack of inventory. But it's important for us to follow these trends so we know what we're getting ourselves into. If you're looking to purchase a home, now you know that you might not have to overbid, you might not have to write a non-contingent offer because there may be less competition. It's important to follow trends and to look at specific neighborhoods where you are looking to purchase and see what's happening in that area. Because you don't want to overpay for a home, you don't want to take the risk of no contingencies, you want to make sure that you are doing everything in your best interest that you can. If you're looking to sell, just be aware that it may take a little bit longer to sell, but that's okay. There's still many buyers out there and it's still your market, it's still a seller's market. This may take a little longer, and don't expect $100,000, $200,000 over asking price unless you're in those big markets like Cupertino, Palo Alto. Those are still very, very hot and seeing excessive overbidding. But most of the Silicon Valley is starting to see a little cool down. And this is good. This is good for everyone. It's good for us now. It's good for the long run. A little cool down. Getting people who actually want to be in these homes and who actually deserve to be in these homes because they live and they contribute to this area into homes in Silicon Valley. Because that's what it's all about. Helping people achieve their real estate goals and get into homes, sell, buy, sell in that area. That's what my business is all about. We love helping people. And if you have any questions or would like any advice or help in the real estate market, we'd love to chat with you. So give me a call at 408-784-0378, or you can email me at ronniejenkins@gmail.com. I look forward to talking to you.